The presenting sponsor for the Intersections podcast is Lynn, Pinker, Hurst, and Schwegman. Built on a culture of winning, these trial lawyers have proven experience, elite preparation, and relentless focus in the areas of commercial, intellectual property, and employment litigation. Visit Lynn LLP to learn more. And thank you so much to the Lynn, Pinker, Hurst, and Schwegman Group for all you're doing to support the Intersections podcast. This episode is brought to you in partnership by Clay Cooley Automotive, family-owned, family-operated automotive company serving the local DFW Metroplex for over 22 years. Clay, thank you for all you're doing to make Intersections possible.
Kyle, I told you that Mark Gibson was one of the most thoughtful, insightful, disciplined, and committed people that I have ever met.
He was really fantastic. Capital Markets, we go through all of HFF history. We talk about him being a little bit of a bench warmer at UT Texas playing football, but really an incredible career to go from HFF in 84 to selling to JLL in 2019 and building really a name that is synonymous with capital markets. Great listen, great episode. Tune in. Welcome to Intersections, where we take a multi-generational look at the critical issues facing America. Tom, introduce our guest.
Mark Gibson. Mark is one of the, I think, most respected people in the real estate business, not only here locally, but across the nation. He is the CEO of JLL's Capital Markets. Before that, it was a firm that was acquired by JLL, but he was the CEO of HFF. Before that, Holiday Finoglio. We'll go through the story there. Been very involved at the University of Texas. He has been on the McCombs Advisory Board, the Real Estate Center, involved in ULI, the very prestigious United Urban Land Institute, has been involved in a number of different REITs, investment funds, et cetera, in the real estate industry. Former All-American at the University of Texas football.
All-American?
Well, maybe I took that a little bit further. He played football at the University of Texas. Now, he had a really good seat on the bench at the University of Texas.
Football being played.
In football.
That is correct. That is correct. Heisman for bench warming.
Yeah.
Mark, it's good having you with us.
Yeah, it's good to be here, guys. It's a privilege.
So first of all, you had a fear of flying?
I did, yeah. So again, I'm going to go back just a little bit. First person in my family to go to college, had no idea about college life. And when you go to play sports, and I mean, truly, I was a great bench warmer.
But you went to college on sports more than academics?
A little bit of both. But I probably wouldn't have gone if it weren't for sports there. It just wasn't in my family. I liked school, but it was sports driven at the time. But then you jump on an airplane and you fly, and it's a little challenging for someone that is doing that for the first time. And I couldn't figure out how it stayed in the air, so I decided to take ground school at the University of Texas because they were offering it as an elective. Yeah. So I took it, and then you could work back then in the summer and still play sports. And so I took all the money I made in the summer and took some flying lessons and learned how it flew and lost the fear of flying.
So you fly today?
No, absolutely not. I just learned how not to be scared to death when it was there. So just face the fear is more of a takeaway on that.
And you're a rock guitarist too.
That is not true, but I try and play the guitar on occasion. Man, where are you coming up with all this stuff?
I've done a research, Mark.
Wow. All right. Anyway.
Well, you did say first in your family to go to college. Go through that a little bit deeper. Talk about growing up, family, clearly not focused on formal education, but talk a little bit about your family.
Great family, come from just had a wonderful upbringing. Classic middle class. My dad actually worked for A.J. Foyt and ran his dealerships, and my mom worked her way up in the banking world and became one of, if not the first woman bank president in the state of Texas with no college degree.
But no college degree?
Yeah. and my grandmother was elected.
That's unusual back then. That would have been a significant.
That's in the 70s, early 70s. So that was unusual. And then my grandfolks and grandparents, they lived in rural Alabama, and they had a grocery store, and they were entrepreneurial. And my grandmother was one of the first women mayors in the South of a city. So I come from independent and
it's pretty strong women
and strong women
legacy.
and men. So it was a great family environment, but just not no one had ever been to college.
Yeah.
What were the values that you learned early on? Anything that stuck with you? Obviously, to push you towards an education and towards college career.
Especially with the strong women who achieved things in an environment that a lot of women didn't do that back then.
Yeah, they were strong, very strong. So when you grow up in that environment, you become strong too, because they were loving and tremendous role models across the board, and so you just learn the right way to treat people. So grew up with character and integrity and telling the truth no matter the consequences, and work ethic, which was probably the way they both got to where they were. It was just an unbelievably strong work ethic and a deep love for people. So all of that was great to grow up in.
You're in a world today surrounded by suits, high finance, but some of the early jobs probably wouldn't qualify on the same plane. I'm thinking of unloading tires and throwing sheetrock up.
Yeah, that's what I think motivated me the most to go to college. So,
the alternative.
Well, we know when you do that and you're in Houston, Texas, and it's 100 and plus degrees, and then you're in an air-conditioned warehouse at the time and rail cars, it gets your attention.
Yep.
But it's great. It's great character building there too, and you are with so many different types of people that it's a great education, and I'm thankful for it. Because without it, you wouldn't be as well-rounded.
And when you went to UT, initially thought of pre-med?
Yeah. Well, yeah. So went as pre-med, like science. And I did well in school, in high school, et cetera. And so I really enjoyed it. And then I got to organic chemistry, and, I inherited this work ethic from my folks. And I went up to teacher, and I said, look, I'll be glad to outwork everyone in here, and I will do that. I just don't understand what I'm reading. Yeah. And he goes, yeah, you don't belong here. And I went, okay. What do you think I belong? I'm kind of new to this formal education thing. And he goes, yeah, I think you'd be great, Mark, at business. So why don't you go over to business? Didn't know anything about the business school, and went over to the business school and loved it. It was a great, he was a great mentor. The organic chemistry teacher actually became a mentor, and it was great.
Very neat.
Yeah.
Always on the finance side in business?
Pretty much. You're going to, because I already know, Tom, you're going to mention something about law school at some point in time, but as part of the business school, loved the finance, loved the markets, loved the financial components to it, but also loved business law. So it really got my attention, just the critical thinking that it brings to bear, and you have to have a trained mentality to go through it, and I thought that was a good discipline. So that was also interesting.
Yeah, and so went into banking, but then did night law school for a period of time.
For a short period of time.
Yeah. So what soured you on law? It
wasn't a souring on law. It was, we'll call it divine intervention. So I was working at the bank, which is a great career, going to law school at night, thinking that it was a really good training, which it was, and I thought the law was fascinating. So it would have been a phenomenal education for me to continue on with it, but I had a desire to do something else. I mean, I had a desire to chart your own way, is the best way to say it. And I can't attribute that to anything other than God. That I'm a man of faith, and it just happened. So the same day I woke up and said, you know what, I don't think I want to work in a corporate environment from a bank standpoint. I want to take a little different approach. So I went from a corporate environment to an entrepreneurial environment. And I said, it would be great to get a law degree and do it, but I don't believe that I can be successful as an entrepreneur and also practice law in some form or fashion at the time. Plus, I had limited financial resources. So I quit both. I quit the bank and I quit law school on the same day.
So all three of those, faith, moving, and we'll talk about it, going from a large organization, as you said, a great career in banking, and then also moving out of law. That all happened 1, 2, 3?
Wow.
Yeah, same week.
Was there a first catalyst of the three, or did they just all converge?
Well, I was talking to two guys that had founded Holiday Fenoglio, and that was Hal Holiday and John Fenoglio, and they were early mentors of mine. And they said, look, we'd love to have you, but, it's going to take all you have. Don't know about this law school thing. I did, I was making, I think, $32,000 a year, which was all the money in the world. I remember calling my dad when I first got the offer at the bank going, how do you spend this much money? And he goes, well, why did you wait till after tax time and then come talk to me about it? So it was pretty interesting at the time. And, they were just starting this enterprise. And they said, look, we'll give you a shot if you want to come over. And it was so intriguing because essentially it was a real estate business. It was a hard asset. And the intriguing part was you get paid for what you do. You're not in a hierarchical comp structure.
E.g. the bank?
E.g. the bank, which is fine. It's just, different strokes for different folks. And for me, I said, gosh, I've got a chance to try this out and see what happens. And there's always alternatives that I could go back and do, go back to law school, go back to a bank or something. But I said, if I don't do it, then I don't want to be a wish I coulda, shoulda person. So my view in that is I wake up every day doing my very best to leave it all in the field, just to use a sport analogy, because going back to the faith element, Tom, I believe that I'm 100% confident I'm going to have a conversation at the end of my life, and it's going to be what'd you do with what I gave you. And I want to have a good answer for that. I want to live life to its fullest in every waking moment. So that's when all that started at the time.
You've coined a phrase in the past, living life backwards, and you just touched on that for a moment. Expand on that a little bit by what you meant by it, and on a practical basis, what it means to you.
Well, I was challenged to give a chat at the University of Texas and to a graduating class, and the question was, what would I want to hear? At the time. And so I had to really think through it. And the best analogy I could come up with is we have one life to live. There really isn't a do-over. And the last time I checked, there's still a certainty about we're all going to die at some point in time. And the question is, how do you live with that known outcome at the end? What do you want to be remembered for? What does your life, from a significant standpoint, want to mean there? So, I don't know. It's an interesting phrase, but what I said was, why don't, to the students that were graduating, I just said, why don't you think about your epitaph and what do you want written about you, your obituary, on the day? Because none of us know when that is, but we ought to be thinking about what we want people to say about us and how we want to answer the question, what did you do with what I gave you? And whatever you want to leave the world with from a significant standpoint, be intentional about living to achieve it, which requires discipline and focus, and you got to be thoughtful about it. Again, knowing that we really don't have a do-over here.
Yeah.
But you add two other pieces to it, given your faith. One is that your last breath here is your first breath in eternity. And that's a conversation not on this side, but it may very well be a conversation on the other side.
Oh, 100%.
Yeah.
For sure. Well, again, I'm very confident I'm going to be asked a question, what'd you do with what I gave you? And so the question really is, from that standpoint, what did I do?
Yeah.
And I want to make certain that I do what is important to God, at least what I have read, and I've spent my life reading what I think is important, and it's people. So if you can help people in any form or fashion, whether it's from a charitable perspective or a career perspective, or you provide financial means to a company, career situation, whatever I can do to lift up everyone that I come in contact with, then that's a well-lived life.
You've got a long runway.
Yeah.
But let's at least take this point. You're in that conversation and you're reflecting, what are some of the specific things that you really say, those are the ones that mean something special to me and mean something special to you? What sort of things?
Well, I don't think I'm going to have to say anything because he would already know. But
I understand.
Here's a better way to.
But what are the ones? What are the things that stand out in your life to this point?
Yeah.
That are meaningful to you because of that.
Yeah. Maybe the way to answer this is I have a mentor, and his name is John Mazel. And John Mazel founded East West Ministries, and he's a force of nature. He's up in years today, but when I first met him, John was in his early 50s and former All-American football player from Oklahoma State, played pro, then drafted to Vietnam, multiple Purple Hearts, got out of the Army, went into business overseas, which was interesting. And then someone asked him to take a year off his life and become part of East West, and he never looked back. And so he's an interesting. He's just a fascinating human being, probably the closest thing to the Apostle Paul I've ever seen here. And I went to him, and I was about 45, and I had some success in business, but I really didn't think that my life was significant. I'd achieved some personal success. I'd given back in various ways, according to, taking care of people in various ways. But I just didn't feel like I was making a significant impact, to the point, Tom, that you were mentioning about, what's the conversation going to be like? And so I asked him to lunch, and I said, look, I'm really struggling with this. I think I'm going to quit. And
what year was that?
I was 45. I don't know, somewhere in that range. Had 2 kids that were, just coming into middle school, elementary school. And I said, look, I think I'm just going to go be a missionary somewhere. And he started dying laughing. And I go, oh. And he goes, Gibson, you wouldn't last more than 6 weeks, man. And I go, really? I go, why is that? And you kind of bow up when someone tells you can't do something.
So you're back to organic chemistry.
So I kind of went, okay, now why do you think that? And he goes, well, let's look at it a little different way. Do you think you are where you are because of you, or do you think God put you here for a reason? And it was so impactful. And he said, I don't think you realize that the good that you can do in the business community, because I can't meet business people and I can't impact the community the way you can impact the community. He's not speaking to me personally, just being in business. And so go be excellent at what you do. And just by nature of that, bring along a lot of other people and help them from a family standpoint, a faith standpoint, a health standpoint, a lot of different ways. And you can have so much impact to do that from a business standpoint, and then give back, other ways that you wouldn't be able to do as a missionary. And I kind of went, wow.
One of the greatest pieces of advice I've ever gotten was, you don't have to have a church to have a ministry.
So how did that change your why when you went back into the business community after that conversation?
Well, you think about it. It's a great question. It changes everything because your whole mission shifts. Because business, first of all, we run a tight ship, and it's always been that way. It's more of a team-oriented approach where we need to win. We demand excellence, but there's camaraderie and there's genuine care about people along the way. So it isn't a 501c3. It is a game on. We're here to be the best we can possibly be, and we're here to be excellent. So within that context, bringing that competitive desire to win, but do so within a team and a familial construct, tough love employed, but deeply caring in a genuine way for each individual in the enterprise, and then giving them the ability to do what I had the ability to do, which former partners and mentors gave me, which is take your skill sets to whatever level you could without any ceilings. So put people in a position to just maximize their God-given talents to wherever they can possibly take it. That is so fulfilling to watch. So that is what shifted, is just going, all right, goodness gracious, we have an opportunity to do some cool things, not only in the business world, but also via the business world to change a community through how we give back. And if we can incorporate that as part of the ethos of the enterprise, wouldn't that be cool?
Yeah.
So that's what changed.
So more fun for you to see one of your people do well than you and the
100%.
team win a big
not
deal?
Even close.
Yeah.
Not even close.
So you mentioned these partners and these mentors a couple times. Who's on your kind of Mount Rushmore of the other men that you've run with in the business community from a faith aspect?
Oh, there's too many to name. Really too many to name. And, I've known a few that I know you're going to ask about, Tom, so I might as well put them out there. But, Scott Dennis is, a CEO of Invesco and the real estate business. He was one of the very first people that I met that was in the Greek community, something called Silver Spurs at the University of Texas. I had no idea what that was. I'd been invited to join, and a little bit of fish out of water, and he was the first person to come up and go, hey, I'm Scott. So he and I have been friends in his education to help me through a lot has been amazing. Jody Thornton, obviously my partner for almost the entirety of my career. He's really the thing that made everything work. He's the talent. He and I are very similar from a heart and a character and integrity standpoint, but very different in approaches to business. He's that unique match, which is why he's the talent. He was rush captain of a fraternity, but he's also a CPA. And I go, how does that really coexist as well as it has? And it's really terrific. And I was more the strategic side, so it's been a great partnership and marriage there. And there's so many others. I mean, I've had tremendous partners for 20 and 30 years within the business. It would take me too long to name them all. And others outside from all different walks of life, from clients who have now become close friends. So one of the great things that I think about business is you meet some of your best friends in the business world if you take care of them and their clients. And so that has been a real blessing to me. And some of my very best friends today are clients and the business.
Yep. So let's go back to Jody for a second, because you joined Holiday Finoglio. It's less than 2 years old when you join. There's 4 or 5 employees. So you're leaving a...
How do you know all this? I mean, first of all, how do you find this out? Anyway, go ahead, Tom.
You leave a secure corporate environment to take this. But that's the first step of something that's become kind of a principle to you. And that is you're going to take risk, but you're going to take risk on yourself.
Yeah, by nature, I'm conservative in terms of a financial situation, in terms of investing. So you would view me as more on the conservative end of investing. You would view me as an extreme entrepreneur on taking a risk on myself. So that was part of the real reason that I discovered about myself, why I left the bank and law school. I had to give it a go. And I I really had seen, I'm a student of people, and I listen to people at various walks in life, and I've always been a little mature for my age. So I've always gravitated toward people that are 10 or 20 years older than myself, just because they're wise. They're wiser than I am, and they can give me advice. And when I look back on some of the folks that I had talked to or whatever, they regretted decisions they had made because they waited too long to try and find their passion in life. And I think that is probably the biggest thing I could tell you about myself. And this is awkward because I don't talk about myself very often, but I would just say that my grandmother gave me the best advice, which was, Mark, if you ever find something that you love doing, you'll never work another day in your life. And of course, she told me when I was 12. So I said, I have no idea what that means.
But you remembered it.
But I remembered. Yeah. And so now, the way I put it when I was doing that little chat at the University of Texas was, life is too short to not follow your passion. So if you can find what you're truly passionate about and utilize your skill sets, your God-given skill sets to their full potential, you're going to have an incredibly exciting life where you want to jump out of bed and go to work. But I saw a lot of people that didn't for whatever reason, and then they had a mortgage, and then they had kids, and then they were sort of stuck because they could not then afford to take that personal risk. Yeah. So for me, it just made sense for me to take it when I could take the risk and give it a go. And then if I had to do something else, I'd go back and do it.
But then you did it again. So
I've done it multiple times.
So you're in Houston with Holiday Finoglio, clearly successful there, but then all of a sudden kind of give up that revenue stream and say, okay, I'm going to turn my back on Houston. I like
yeah,
that.
We
That
like
was a
it.
smart move.
Yeah.
Turn my back on Houston.
Love Houston, guys. So just
and then come to Dallas with Jody.
Yeah.
Why?
Well, let me. You've said a couple things about success and things like that. Let me just say that I take no credit for it. I mean, it's divine intervention, number one, first and foremost, and number two, I've had the most incredible partners. I named Jody, but there are 40 partners that I've had, much better than myself, and the combination of all of these skill sets allowed me to achieve some things I wouldn't have achieved. All right, so let's get that straight. But in Houston, when we had started the enterprise, I had a big desire to do things a little differently. One, from a partnership standpoint, and I had met Jody. Actually, Scott Dennis introduced me to Jody, so there's another connection as part of that. And I just thought he and I could do something, special. So he was in Dallas. My wife was originally from Dallas. I was in Houston. My entire infrastructure and friend network and business network.
She was married well.
Married in Dallas.
Was in Houston. So it was a tough move to leave
family.
Still some of my best friends I've known since second grade. So it's hard to leave that support network and then go to a different city. But it was just something that, again, if I didn't do it, when was I going to do it? And from that point on, both Jody and I essentially put everything we possibly had personally into the business. And given both of our backgrounds, failure was not an option. There's no there. Yeah. So we literally invested everything we had into the business and said, let's give this a go.
Yeah, and talk about those early days.
Well, let's look at one thing. Mark, as you talk about this, and you've talked in very humble terms about your partners, I think all three of us share the view that the Lord puts us in positions and He's the one that directs our path. But as you talk about the partners and all those folks that you work with, it's still significant that you became the CEO, that in the end, the responsibility fell on your shoulders.
Yeah, it's a great privilege, but I don't view a title as meaningful because it's not the way that we have always run the business is a partnership. It's a team, and there's one person, one vote. You earn the right for that vote, but there's one person, one vote. And my point of that in stating it, and I appreciate the comment, Tom, but the fact of the matter is I have never met one individual in my life who was competent enough or good enough to run a complex business by himself or herself. And I think it would be the most arrogant statement in the world to profess otherwise. And so you need so many skills these days to navigate the complexity, particularly in the capital markets arena, but also in any business. And you just need different approaches and different ideas. And you need right brain, you need left brain, you need different perspectives. And I think the real fun of life and the spice of life and the fun in business from a competitive perspective, business has become my sport. I can't play anything anymore except for ping pong, maybe, and be competitive. So it is my sport. But you can't win unless you have differing perspectives to give you these different views to go approach things. And that is so much fun looking at it.
But you also can't win without good leadership.
Leadership matters. And I've been around some great leaders.
So move to Dallas. That goes well. But then the firm starts morphing in a number of different ways. You have in 1990, mid-90s, you are acquired, merged with Aramco.
Yep.
Then later on, that shifts. Lend-Lease comes into play on it. You had a firm that you've described as pretty tight. What did all of those acquisitions, new players come in, mean for the culture of the firm? And how did you maintain the strength of that culture that's so important to you?
If you grow up in a team environment, so I got to give attribution to sports and teams. And by the way, it doesn't have to be sports. It could be a debate team. It could be any team, as long as you had to work with other people and you had to best coordinate the skill sets of other people, which are going to be very different, individual to individual, which is the strength of a team. But you all had to be coordinated on the mission to go drive the mission. So we always had that mantra. We've always, these days you call it a strategic plan. We've always had, here's the objective. This is where we're going. This is what we're doing. Let's talk about this. Let's debate it. Let's get buy-in terms of where we're going. Because without asking people's opinion that you really value and they feel like you really value it, you're not going to achieve the goal. So the whole idea of team is asking the question, this is where the industry is going. What do you think, and how do you think we ought to do it? And you take that accumulation of knowledge and you say, fine, then this is where we're going to go. And so the idea of team and ethics and excellence and accountability has always been at the forefront. Now, as part of that, and a little bit of the nature that we've been talking about, we challenge ourselves every day, truly, but for sure every year in writing with the strategic plan to be better than we were the previous day or the previous year. And as Jody used to tell me, he goes, Mark, you make me tired because we are always striving to take it to the next level. And when we see shifts in the industry, we have a thematic within the enterprise that has always been there. We're player coaches because I don't know how you run a business and not be in the game. So being a competent practitioner, really extraordinarily good at your trade, you attract talent because talent isn't going to follow mediocrity. So you have to be excellent at what you do. You have to be extraordinary at what you do. And that evolves into leadership, we think. And so with all of that happening and you challenge yourself every year to be better than you were the previous year, it takes you in different directions. Now, we sold the business to Aramco. Then we orchestrated an interesting additional sale
with Fowler.
to Lendlease.
Lendlease. Australian firm.
Correct. And then we bought ourselves back from Lendlease. And then we took a 45% interest public. But right. It's important to note two things out of that. And this is going to get too nerdy for a lot of people, but the math is important because it reflects how we think. Mm-hmm. So we sold a 45% interest in the enterprise because we wanted control. Mm-hmm. And the second was that we only sold an 85% economic interest at the time of the 45% because we wanted future generations of the company to have skin in the game.
Yeah.
So they owned 15% of the economics as part of what is driving because, again, we've always owned it as a partnership.
Yep.
We wanted that partnership thematic to last across the years and decades. And so if you fast forward, the two takeaways from this are, one is we made every mistake known to man in buying and selling the enterprise and taking it public and merging with another public company. And that's all been fascinating and fun, but we've learned a lot. The second is that profit participation and compensatory framework to align interest has remained intact and to drive to the strategic plan. So that all started back in team and partnership and all the lessons learned there.
But if all that is important, why sell for the first time? Why did you sell to Aeronesco?
Well, our clients wanted us to expand. We were a bunch of, we put everything we had in the company. Yeah. And so we didn't have the balance sheet to open multiple. The way we did things back then is you wrote a check and you capitalized the business and you hope it worked. Mm-hmm. And so when you take that kind of risk, you don't sleep well at night. So we were taking a bunch of risk in it, and that was fine because we were all in. But we had to think about, okay, how are we going to really do this? So the first sale was really, we need a balance sheet to really go from 5 offices we expanded to 24 offices in 3 years, just to put it in perspective.
So and as part of that, you merged with Fowler, right?
We bought a group, John Pelusi's company, and then we bought John Fowler's company as part of this roll-up underneath Ameresco, and that formed what you now see now as part of the HFF and now JLL Capital Markets business. And we stayed partners together. And the interesting thing is, Tom, when you roll that up and you ask why, we're always challenging to take it to the next level. But the interesting thing is we've all stayed together. Mm-hmm. So the core partners and the core partnership have remained partners throughout all of those changes, which I think is really unusual for teams and individuals as they get in different stages of life and different financial positions. They all stay together, and there's something wrong with our DNA because we still work as hard as we did when we were 25, but we love the business. We found the passion. We respect and love each other as part of this and hold each other accountable in ways that would be shocking to most people in terms of what are we going to do and how do we do it? How do we take it to the next level? And we all feed on that. It's a lot of energy.
So when you bought the company back in 2003, was it a financial exercise or was it to preserve the culture?
It was to preserve the culture because we had built something special. Lendlease was exiting the United States. Mm-hmm. And so we approached them and they agreed to
so you had the opportunity because it wasn't fitting in with their strategic moves.
Sell it to us. And, you can't really trade a services company unless everybody wants to go along because it's not worth, the enterprise wouldn't be worth much. And so it was more a strategic partnership decision. We also thought, obviously, it was going to be a good economic decision, but we also then re-upped. Where we had put everything in, I was talking about Jody and myself, put everything in to begin with. Yeah. We re-upped to buy it back and then take it to where it is today.
So tactically, HFF was synonymous with capital markets. I mean, y'all were the leader in North America for sure. Tactically, what did y'all do?
Well, one of them.
But I'll give you the credit.
Okay.
What did y'all do day in, day out, outside of the leadership and the cohesion, the culture? What did you do from the business perspective that really set HFF apart?
We focused on talent. So we wanted people that came with a work ethic, that come with a moral compass, that they have there's a strong character and ethic component to them. So we always felt that our weakest link is going to be the reflection of all of us in the brand. So we were always extraordinarily careful about the character of the individuals that we employed. Now, the way we would say it is you need to be top 1 or 2% from a competency standpoint in the industry itself to do it, but you have, most importantly, got to be a great human being.
Yeah.
And make that happen. So we didn't really want anyone that could not act within a team construct and think about someone else's interest before their own interest, which was the key cultural component that still remains. So we're one of the few that, we make mistakes. Everybody makes mistakes every day, particularly on people. But we don't make many. We don't make many on the character and the ethic front. We may miss it on the competency level or the passion of what they want to do. They may want to be something else, and we help them go do that. In fact, part of the strategy of the enterprise is let's go bring in very talented people out of college. We would prefer to grow organically. Let's treat them as partners. Let's give them a world-class education. And if they don't want to be an intermediary, that is great. We will go help them find their passion and go do that. And we genuinely care about that. I mean, that is really important. So we love it when a client hires one of our folks. We think that's a great thing. So if you put the individual first and they know that you have their back, then you're going to get all they can possibly give. And that's how all of us were built. And so that was the real key to the culture, we think.
So then and now, up and out? Is it an up and out culture?
What does that mean?
If you don't perform, we're going to help you to move out quickly.
Yeah. But we make that very clear. We say, look, you as an individual are incredibly important to us. This may not be your career, either voluntarily or involuntarily. In either way, we're going to be fine. We just want to have you know the expectation. This is what we expect. And if it's not going to work out because it's not right for you or it's not right for us, we're still going to really care about you. And you tell us what you want to do, and let's go find something really cool for you to go make it happen. And I think if you just have this, I don't know why it's this mysterious view in employer and employee type thing. It's just human dynamics. And it's psychology at the root of psychology. And so when people know that you really do genuine care and you have a history of walking your talk, so it's not just talk, and you have decades of examples of that sort of thing, then people, they get it.
They get it.
And we have those conversations every single day.
Sure.
But the accountability and the excellence level has always been very high.
So from the early 80s to pretty short time that we're talking about now, early 2000s, short period of time, you take a firm of 4 or 5 people and transform it into a leader in the industry. But what we haven't talked about is the backdrop. So middle 80s in Houston, probably about as difficult a time as you can find in real estate. That then repeats itself in the early 90s. What was it like to deal with those scenarios when the market moved against you? Difficult, tough time, but still to push through with all the principles that you've talked about and continue to grow.
Yeah, it's a great question. I think everyone is really a good person when things are going great. I think you discover who people really are and maybe who your friends really are when things aren't going so great. So that was a great test in Houston. So you develop perseverance, you develop resilience. And I think the message to maybe some younger folks out there is every phase of life in the business world or otherwise is there are lessons to be learned, and they're all really important because it's all going to keep you in great stead no matter what you're going to do. So in those days in Houston,
RTCs and things like that.
I mean,
trivia. What does RTC stand for?
Don't know. I once knew.
Anyway, Resolution Trust Corp. So
yes,
when
Resolution Trust.
Anyway, not that I wear that with a badge of honor, but I would say just put that in perspective.
Sure.
So for everyone, there was only one bank in Texas that didn't fail of any size, and happened to be Frost Bank out of San Antonio.
Yeah,
and we kind of helped them. So we did a sale leaseback way back in the day to help recapitalize and go, and they made it through, which was interesting. But that was the dynamic that we found ourselves in. And so when you have that much of diversity coming at you, you learn how to be the best you possibly can be in any environment, number one. Number two, the lesson you learned about financial viability, no matter the economic environment, was crucial. So if you fast forward, and what we learned from that, we never had debt in HFF, ever. So I personally have tried to not have much debt, so live within the means, because I saw so many people whose lives and entire business careers and companies were gone in an instant because they didn't prepare. And so a thought for everyone is you should bulletproof your business and your balance sheet when times are great.
Yeah.
Because the way to create enterprise value in our minds collectively is take advantage and play offense when everyone else is on defense. And the only way to do that is to make sure you're in excellent financial shape when times are really good, and be thoughtful and disciplined so you can really grow when the opportunities present themselves.
Was there ever a moment where you looked and you felt the survivability of your firm was in question during some of those tough times?
Well, yeah. So we went public. You had the stats, Tom. So you go public in 2007.
Yep.
And
the market does.
Company implied value was about $650 million. You went out higher than the market indicated it was going to be. So we had a very successful IPO.
We had a very successful IPO, and then we operated it for a year, and the stock went from 23 or 24 at a high to $1.50 a share. And you get a letter from the New York Stock Exchange saying, I think we're going to delist you. And I'm going, okay. So we had $3 a share in cash. And I go, how does that work?
Yeah.
So, an interesting statement about that is we were going to lend the enterprise money. Personally. Because we believed so strongly in it and the people in it. And we weren't going to let it go. We would have also taken it private, but the people that bet on us, the shareholders, which were name shareholders. I mean, today they're still around because they were AAA rated folks that we had done business with for a while.
Institutions or individuals?
Yeah, institutions. So we called them and said, look, I mean, if this persists, I don't think people understand the enterprise and they don't understand what we're doing. We got $3 a share in cash. We're trading at $1.50. I mean, at some point in time, it would probably make sense for us to take it private and we'll figure it out. But we're not going to do it unless you can come along with us because we know what we're going to achieve.
Yep.
So if you can't convert your publicly owned shares to LP interest and come with us, we won't do it. And they couldn't because it wasn't in their bylaws to be able to do it. So we didn't. So I think that goes to character. I think it goes to integrity. I think it goes to doing the right thing by people that did right by you despite the circumstances. And it paid off great. So we took it from that humble start from 700 plus million down to, I forgot what it was, 20 million bucks or whatever it was. And ultimately grew pretty successfully there with great shareholder base.
Right. And sold.
Who never forgot it.
And just to put it in perspective, sold in 2019 to JLL for roughly $2 billion.
Yeah. What did you see in the market in 2008? What gave you the confidence to say, hey, we're going to make this great? How did you see the market evolving after the financial crisis?
And let's remind our audience.
Yeah.
Everything crashes in 2008.
Yeah.
Financial markets walk away. People in Washington wonder, is this the end of the economy?
Yeah. It was a terrifying moment, right? But again, I'm going to go back to faith, number one, because at the end of the day, you that's the anchor. Two, the strength in the team of the partnership was extraordinary. Talented people. We all believed in each other, and we all had each other's back. Three, we're all player coaches, so we're not guessing at the market. We know the market. We have done every job there is to do in JLL Capital Markets business, including copying and everything else from soup to nuts. So we were practitioners in the business, and we understood the market. So we had confidence to go do it, and we knew if we stayed together that this might be the best opportunity we would ever see in our careers. But it had a lot of risk, and so we stuck with it, and it worked.
The follow-up there, too, is you'd enjoyed a pretty significant run post-GFC. The business grows. You get acquired in 2019, and now we shear the cliff again, and the market totally changes again. Draw some parallels, or maybe not, between what you saw in 2008 and then ultimately what you experienced in COVID and how that market has now changed and ultimately where we are today.
Well, COVID was obviously different than the financial crisis. So that was unique because no one had ever seen that before, but the same principles applied. And the good news is JLL has been a great partner. So John Gates and Greg O'Brien, I can't name all of the phenomenal partners we've had, both in HFF and JLL. But they met a bet on us, and we weren't going to let them down. And so we said, we will get through this, and we will come out stronger. We need to go on offense, though.
But why sell? 2019, markets are pretty strong. We haven't seen COVID yet. Markets are strong. You've developed some scale that you didn't have back when you either bought out in 2003 or went IPO in 2007.
Yep.
Why sell in 2019 at all?
Well, go back to the statement I made. We're challenging ourselves each and every day. And I guess the short answer to the question, Tom, is we saw the industry changing. Go back to my statement about deeply caring for our people. By the way, before I answer that question, I do want to say one of the takeaways from 08-09 is I never want to be in a position to put any of our people's financial standing or their careers at risk because of bad decisions we made as leaders. It's just that would kill me probably. So the takeaway from that is we were bulletproofed. We didn't have debt, but we were never going to ever be in a situation where we had to lay off people because we had an undisciplined approach to the marketplace and did not foresee things that might happen. Okay, so keep that in mind. So we get through COVID. Those same disciplines apply. JLL was financially in great shape. They had given us the ability to run the business, which is a testament to the leadership of JLL, which there are very strong leaders there and great partners. And we essentially did the same thing we did in 2008, which is the moment we saw any kind of stabilization or we saw some view of where things were heading, we had to go on offense, which we did about 3 months into COVID. So that was a really interesting time to think through how we do that, but the same principles pretty much applied. The reason we sold was we saw the industry globalizing a little bit in terms of overseas capital moving into the U.S. We had an office in London at the time of HFF, but we knew Australia, we knew Asia was going to be significant players, and it took a lot of time to fly back and forth. And we didn't have anyone in country speaking the language or providing deal flow within the language or in the countries. And we just thought there was going to be a tremendous amount of inbound capital as well as some outbound capital from U.S. investors, and we need to be a player there. We also saw the advent of technology, even though it's kind of what most people go, well, yeah, no kidding. But in 2018, maybe not. But we were always ahead of the curve in that, spending 10 or 15 million a year for a small cap company and trying to get up to speed. So we saw that shifting. And then we saw the multi-housing business and the agency side of the lending business changing. So for all those reasons, we just said, look, we are willing to give up a great board, a phenomenal financial performance to ensure our people and our clients that we're not going to be caught flat-footed in a changing atmosphere and an economic backdrop that we see coming, at least not on our collective watch. So we all got together as a partnership and said, let's think about this, because we had a bunch of folks, different people approaching us, and we said, do we really want to do this or do we not want to do this? And from a cultural perspective, the best possible match was JLL for a host of reasons. And we were hoping for, and we felt confident that would be 1 + 1 = 3. I think it's actually been 1 + 1 = 4. So it's been a really good match. But the motivation and the catalyst for the why, and it was a big why. When you lose your brand that you built your entire life,
right? Yeah, becomes your identity.
Theoretically, you lose control of an entity that you and your partners have built and owned. It's a big statement, but it also goes back to a core principle of we have to be excellent at what we do. And we saw it changing, and we needed scale to handle the G&A that we believed it was going to take to get to where we need to be, and to really drive it to where we thought it could go.
Okay, small firm, 4 or 5 people, you develop that, you move, you go through these very difficult times in real estate through this period of time. You go through buybacks, IPOs, sale. 2014, you're made the CEO. You continue to lead the capital markets. How has your faith changed over all these years, all those experiences, all those different positions?
Just gotten deeper throughout it all. And I think that happens to you in life if you're a student of life and a student of people. I just think it would be, perhaps this is a better way to say it, it would be much more difficult to convince me that God does not exist than God exists by both personal experience as well as intellectual rigors.
Pursuit, yeah.
So, but I'm also speaking from an objective perspective. And I come from a perspective where it wasn't the intellectual part that came first for me. It was the personal experience part that came first for me. So then I had to wrap my head around it, which meant I really had to study for a long time. So I think part of watching—
So what did you study?
I studied scripture, and I asked every hard question that everyone should ask.
In fact, you've said that before, that when you came to the Lord, the first thing you did was ask hard questions. What were the hard questions you had to ask yourself back then, and how did the questions change now?
Well, what most people would ask is, does God really exist, I think. For me, that was not a question because I knew it. And I won't go into it, but there were some early personal experiences that are inexplicable, and most people would find it hard to believe, but it was real. So then it was a question of intellectually, okay, well, let's figure this thing out. What really happened? And so if you really study and you are objective, you're going to have questions as you go through it. So. I mean, you just are. And there are going to be challenges along the way that you have to really ask some folks that have been through maybe a little different period of life, and you got to think through it. And then you look back over time, and it's so obvious that God was there the entire time. But that's what faith is, I think, is having the hope, even though you can't really see at the time what is happening, but you have that faith that it will work out. And that has been that's my everyday experience. Yep. So throughout everything that we have done in both life and in business, it's gotten much deeper.
How do you make that part of your organization, both in terms of a culture of an organization, but also as new people come in?
I don't talk about it. So I think the way for me is action. Yeah. So I would rather have my actions and my attitude and my ability to show genuine care or concern or whatever you want to call it for people that come here. I'd rather do it in deed than in word.
Yeah.
So the principles of the enterprise are all faith-based in terms of moral compass, ethics, telling the truth no matter the consequence, work ethic, genuine compassion, all of those things. The fundamentals of the enterprise are built on that. But it's one thing to say it, and there's a lot of people that say things. It's harder to find the discipline to do it. So that is the approach. Yeah. And I think over time, you see it, people watch, and, I think if you demonstrate certain things, eventually people ask you, why do you do that? Why do you do it this way? Why did you handle things that way? Why did you give that individual another chance in life? So those kinds of discussions that happen. And we have had many of those situations in life because, you run a business of a lot of people and you're going to have various situations that occur. And, being human about it is known and people take interest.
Yeah, I think one of my mentors has always said, people say what they think, but they do what they believe. And I think that's indicative of exactly what you're talking about. You have to live it every day.
Yeah, well, I'm far from perfect. Yeah. So let's put it that.
I think that was 2,000 years ago.
Yeah. So far from perfect. But the goal is to walk it, not talk it. For me, but that's me. A lot of people are different.
So Mark, where is the capital markets world today? Before we started this, obviously we had a brief conversation. Yeah. Made a comment that it's changed a lot, and the world looks different than it did in 2019. There's been a massive repricing of assets globally, new entries, data centers, now AI. It's a whole new world. 2026. Where do we stand from a capital markets perspective?
So let's just rethink, because you guys started in 2020 talking about COVID and what was happening in 2020. So think about the shift that has changed, because it was pretty stable from 2010 to 2020. Yeah. Treasury, oscillated within a certain time frame. The bond market was relatively tranquil.
But largely a zero rate environment.
Yeah. Well, that was... Actually, no. I mean, the 10-year bond was, call it 4-ish, during that period of time. And then all of a sudden, you have this precipitous drop and all this stimulus into the economy from a Federal Reserve perspective, a government perspective, lots of different stimulants coming into the economy. The bond rates drop precipitously, and that's your virtually no-cost money, right? Starting in 21. And so people acted accordingly. I mean, you had ample liquidity. Yep. You had it at near zero cost. And so the asset world repriced to that. Well, real estate is unique because it doesn't change price every day. It's a hard asset. It has leases. It has things in it. But when your cost of capital, the theoretic risk-free rate of the Treasury, dramatically rebounds up 300 basis points or whatever it is, it changes the dynamic. But it takes real estate a while to get there. Yeah. Okay, so not only did we have a changing cost of capital construct, so think cap rates and things like that, we had supply chain and logistic issues in terms of new builds. So you had pretty consistent large cost overruns than what was originally projected, in addition to a rapidly shifting cost of capital in commercial real estate. And that has taken 3 years to work through, guys. So it has been an interesting market. Having said that, where are we today? So where we are today is the listed securities market in the United States is up plus or minus 75% in 4 years. Okay, real estate, it's a very general statement. So just very general audience, down 20% or 25%. So if you are theoretically a relative value investor, which most large LPs, state plans and sovereign wealth funds and others state that they are, then where is the best relative value? So do you invest at a peak in the listed securities environment, or do you take some risk in the built environment? And the resounding answer is we're going to take risk we're going to invest in the built space because we think it is right-sized. We think it has relatively gotten to what we deem fair market value relative to the cost of capital. We think cost of capital, despite the last 3 weeks, is within this range, which is back to where it was pre-COVID. And so this makes more sense to us. And so we want to come in now. So what is the long-winded summary of all of that? There's no lack of capital. There has been lack of capital in the core space, what we call, the lowest cost capital with the best product in the marketplace, but that has shifted because that is what people want today. Large investors want core investment with current cash on cash and buying great assets.
Yeah, but you said it's not a question of the supply of money. There's a lot of money out there. It's the spread that there's still a gap between the give or the bid and the price.
That's really diminishing. So the bid-ask gap, Tom, to your point, is diminished to where we're pretty much at market.
Okay.
There's a little bit.
So more equilibrium than a year ago.
Yes. More equilibrium than a year ago. Again, you have and have-nots. Each asset class is different. Each region of the country is a little different, depending upon where you are. But generally speaking, the bid-ask gap has narrowed, and you've seen it in the transactional flow, which has increased 26+% over the last 12 months. So that doesn't happen unless you have a bid-ask gap coming together with buyer and seller. And there's a lot of other factors that are coming into it. But I think one of the interesting things for the audience to take away from is there is no debate among people that make policy and are large-scale investors. There is really no debate that the United States is reshoring its manufacturing capabilities. We uncovered systemic risk in the pharmaceutical business and the semiconductor business and various other basic manufacturing needs, and that is afoot. So when you look at the tax code that was passed last summer, and you look at the changes to the 401k and defined contribution plans, the accelerated depreciation from the tax code, you look at the reshoring component of the manufacturing base and the amount of trillions that are going to go into rebuilding that base, in addition to the power and the data, so that is a separate component, the investor base, anyway, sees growth, particularly in the U.S. So they see this. We see it. We're beginning to see it materialize in the job numbers of late, particularly the last 2 months. And so we'll see if that persists. But what investors are looking for is the structure that is happening both in public and in the private domains. Is it generative to growth? And if so, real estate makes a lot of sense. to go do this. And we're seeing it manifest itself in our leasing demand. If you look at our retail leasing or industrial leasing and the office leasing, it's pretty demonstrable better than 18 months ago or 24 months ago that are there. So we're seeing it show up in a lot of different places, and that's different than what you would read in the press. But it is happening at scale.
Well, let's go through the sectors. You mentioned each of the sectors are different. Let's take the office. Of course, that was coming out of COVID. It was dead, gone, see nothing. But yet you see the pockets. You see pockets in New York. You see pockets in A-class, et cetera, that seem to be doing awfully well now. Now, other parts of the country, BC maybe not so much. Where do you see retail over the next several years? I mean, in office over the next several years?
Well, we've been bullish on office for a while because I'm going to go back to some common sense things. So people get wrapped up in very long words and a lot of acronyms when they talk about capital markets. But if you just go back to common sense, companies thrive when you work in a team construct. You have mentorship that needs to take place. You have very talented young men and women that want their careers to excel. They know they need mentorship. And frankly, if you want to ever lead, I don't know, you can lead yourself, but I mean, it requires other people. And it requires not only do you need to be competent at what you do as a profession, you need, if you're going to be a leader, you have to master the art of human behavior.
Be with people.
And psychology, and how do you get people all aligned in the right skill sets to do it. And that is a lifelong skill to learn. Well, you can't do it alone. And so we have seen that and knew that was going to take place, as did all of the major companies in the world. It's just we had a problem. And a massive behavioral shift that no one could have predicted. And it takes a little time to work through that. We're still working through it, I mean, to some extent. But for the most part, Tom.
But the trend is clear.
Well, for the most part, everyone's pretty much back. I mean, there are going to be exceptions to what I just said. But then the question is, there's a lot of office that is obsolete because there's the new, and then there's the old. And so the question really is, in office, there's really the greatest have and have-nots. So you have a sector, call it 50% of the inventory, that is going to be relevant going forward, and then you have 50% of the inventory that is likely to be repurposed in some form or fashion. And that's going to take a little bit of time. It's very similar to retail. So if you think
about— Where does it get repurposed?
Everything. I mean—
Hotels,
it could be torn down. It could be user— owner-occupied, where they take it and get the 1-year bonus depreciation because, that is happening across the board. So it's all kinds of uses. But if you draw a parallel to office and retail for a minute, when COVID hit, retail was gone too because everything was going online, right? Yeah. Well, now, hard asset retail is the darling of the investment world. And every occupier in our retail tenant universe is going to expand store count dramatically, and yet there hasn't been anything built. Well, there hasn't been anything built for almost 18 years, right? Well, office, there's not going to be a lot built. You're going to have a few built, but it's very difficult to build. So, in and of itself, it'll be probably a very similar path for office as it was for retail. So that there are similarities there that should not be missed. And then when you think about industrial and you think about the reshoring component and you think about the power component of data and the adjacencies that come from that, the industrial leasing business has just really rebounded from the tariff day of April 2nd when it paused for a while. But that has now shifted. So, from just a common sense macro standpoint, real estate houses the U.S. economy, in essence. Okay, from a living perspective, an office perspective, an industrial. Virtually every walk of life is in a hard asset in some form or fashion, right? So the health of that hard asset is kind of an interesting economic indicator of what we're seeing, and we're seeing it. So we hope it persists, but that is why real estate is now in favor Tom, and why there is plenty of capital to pursue it, it's just going to be measured. I mean, it's coming off a 4-year run where it underperformed every asset class in the market. So people are cautious, but optimistic.
So where does technology fit into it? What happens to technology as it pertains to the real estate space? Because real estate for decades has frankly been a laggard in adoption of the technology. AI has 100% changed that. If you're not adopting AI, you truly are behind. JLL, I think, has been at the forefront of this, going back to JLL GPT and going back to what they did with JLL Technologies in 2017, 2018. But talk about where AI technology mixes with this to create even greater efficiencies.
Well, I think it will augment the human. So we're very different in our thought process about it being job destroying. So let me give you the perspective. We outsourced 40% of our manufacturing base over the last 40 years, plus or minus. I'm speaking in generalities for cost reasons. We uncovered a systemic risk as part of COVID, supply chain, everything that we all learned. If we just automatically reshored that manufacturing base, you run the risk of hyperinflating the economy just because of the cost delta of where it can be in other parts of the world. But with AI augmentation, you get to where you need to be. And we do have a little bit of a labor constraint here, even though there's quite a bit of people that are needing a job. We have somewhat of a labor constraint. So the AI augmentation is going to allow us to reshore this. On the real estate front, you're going to see systems change from property management to leasing and lease management to underwriting type things. But the accountability of the output and the legality of the output and the litigation risk of an AI-generated outcome, those are all very real. And so there has to be someone accountable for it. But there's no doubt that the productivity in GDP productivity as a result of this is going to substantially increase across the board. And we're seeing it. I mean, to your point, we invested early and a lot to achieve where we are. So just the amount of data that you now have at your fingertips, just with owned information, is extraordinary.
Of course.
And so we see it. So when we take the leasing data and you look at the capital markets data and you can get the trend line and the directional line, it helps our clients look just a little further around the corner, which is a true competitive advantage, which is really terrific.
We talked about type. You deal in markets all over the world. Talk a little bit about how you see this market, Texas, North Texas, over the next 5-10 years, and where you kind of put that in the array of attractiveness of all the markets that you deal in.
Well, there's pros and cons of every market, Tom. So, we do see it all over the world. Texas is, let's put it this way, we are very blessed to be in Texas. You have a pro-business community. You have a relatively, depending upon where you are, reasonable cost of living. You have an entrepreneurial spirit that is unmatched, I think, in terms of people just trying to figure out how to start businesses and how to get into business. And the business community in Texas, generally speaking, will give someone a shot one time, give someone an opportunity one time. And if they do well and they do what they say they're going to do, there'll be more of it. And so that is a very unique construct in terms of a macroeconomic backdrop. You add to that the population growth that we've seen, and you add to that the corporate relocations that we have been fortunate to have, particularly in North Texas, but all over Texas, come into the state. Real estate does better when you have population and employment growth, obviously. So it's just the infrastructure and the foundation that is being laid in the state in terms of both institutional type employment. So think large conglomerates and large companies and financial institutions or Toyotas of the world or pretty much every walk of life in the business community. The foundation and the talent pool and the concentration of that talent pool is attracting more and more. So we just can't mess it up, I guess is the point. It's a very, when you look at the concept of what the governor did with the Texas Stock Exchange is a pretty darn good example because they blended public policy for listed enterprises on that exchange, providing some risk limitations and other interesting things as long as you're listed here. Well, that's unique to find the public-private sectors coming together and going, well, gosh, we might as well try something a little different and try and make it happen. So I think that kind of entrepreneurial spirit is alive and well, and it's been really good to watch.
So with all the successes, if you went back to that young man coming out of UT into a bank and gave him a couple of pieces of advice, what would they be?
I think one is it doesn't really matter what you make out of college. What matters the most is finding the best mentors. So finding the best people that can teach you the right way of business, not the wrong way in business. So your personal brand is going to be forever impacted by who you affiliate with. That's not really different from when you were young. I mean, you're defined by who you hung around with. Well, in the business world, it's more acute, and people do not forget it. So I think it's incredibly important to find the right mentorship and the right people to associate with. But the second thing is, and this would be really important to convey, is you really have to find your passion. Because life is truly too short to do something where you come home to work every day and, your significant other or your spouse or your kids or your parent, whoever. Well, how was your day? Well, I was unbelievably mediocre. I mean, that is not what people want to say, I think, for the reflection of their life. And if you have passion, you will give it all you got. Mm-hmm. And you will be excellent at what you do because you're interested in it and you can do it and you have to find it. So I would say persevere and go find it because you got one life.
Well, Kyle, Mark was never an All-American on the football field.
I was,
but I can tell you, and I think you've seen it over the last hour and a half.
It's been special.
In terms of his character, his integrity, his discipline, and his leadership. He's been an All-American in every other part of his life.
Now, guys,
Mark, thanks for being with us.
Thanks for doing it.
Thanks, guys. See you.
Thank you for watching today's episode. Again, today's episode is sponsored by Clay Cooley Automotive, a family-owned, family-operated automotive company serving the local DFW Metroplex for over 22 years.